Happy New Year, everyone. Welcome back for our first video of 2022. We are excited to give you our first great long-term pick. And this time it's a stock pick. So currently, while the market is down, it's the perfect time to dip our toes into something new.
Today we're going to be talking about a stock we believe is still in its infancy and has enormous growth potential.
That's right. As we speak, this stock has a current market cap of around 2.2 to 2.3 billion dollars and is considered now in the small caps stock category. It's a tech stock.
This company is called Lemonade, one you may have come across before. So Sean, what does Lemonade do?
So Lemonade's tagline is insurance built for the 21st century. It is an insurance company which reverses the traditional bias for insurance and makes everything super easy for the user. It uses Maya, its AI bot, to give you quick coverage and makes it very easy to claim. They also give back to the customer if there's any money left over, with the option for that to go to charity. Sounds amazing, doesn't it? Let's have a look at the app to see what it's like.
That looks really amazing. I'd definitely sign up if it was available in the UK. Where is Lemonade currently available?
So yeah, it has a 4.9 out of 5 approval rating on the US App Store. And currently it's available in France, Germany, Netherlands, the US. So there's a limited amount of locations, but they're expanding quite a bit, and it'll be available across almost all of Europe, including the UK, in the soon future. So there's massive growth potential here.
I heard that not only is it expanding its geographical locations of where the insurance is available, but also the types of insurances it is providing.
Yeah, that's right. They recently acquired a company called Metromile, who are car insurance providers, for $200 million in cash. So they're expanding their revenue streams, and so you can see potential in the potential future. Not only is it expanding the geographical location, but also the types of insurance it can provide.
Great, so we understand what they do, but what about the share price and other metrics? How are they looking?
Yeah, let's talk through some data. Right, so here we have Yahoo Finance, which is the best source of financial data for a company. And I'm looking at the statistics section for Lemonade here. So you can see they have a market cap of 2.66 billion and an enterprise value of 2.34 billion. So when the market cap is greater than the enterprise value, that actually means a company has more assets than debt. So that's a good sign. When it's the other way around, that sort of says that you have less assets than your debt, which is a negative a gauge of a company. So that's our first sort of green tick for this company. It has a price to sales ratio of 24, which is quite high. But remember, Lemonade is in its early days and it's a high growth company. So high growth companies generally tend to have high price to sales ratio, and then once they mature, they tend to settle down. Um, what else can we see here? So you can see the share price was 35. It's $35 right now. We'll go a bit more into detail into that in a bit. What about its percentage held by insiders? 33.3% are held by insiders, which is actually an amazing stat. So this means that the insiders of the company have confidence in the share itself. The higher the proportion held by insiders, the more confident we can be that the company are striving to do something great because they themselves believe in their own company. Um, another sort of metric here is the percentage of short. Now you can see that percentage of short is incredibly high. In fact, it's 34.92, which means that there are a lot of companies which are betting for the shares to go down. And when that happens, there's a lot of pressure on the share. And that's also reflected in the share price. And we'll go through the share price in a bit. But what that also brings is an opportunity for something called short squeezing, which is when there's a high volume of buys, the shorts essentially get burnt out and the share price increases at a much higher rate than you'd usually see. And that's something that happened with GameStop earlier in 2021. So there's definitely a potential for that to happen with this stock if there starts to become massive buys. So that's another reason we're quite interested in this company, as well as the fact that we think it's a great business. The revenue was 107 million in the last 12 months, 108 million approximately, and the quarterly revenue growth is substantial, 100%. That's a quarterly increase of 100%. That is really good for a company. So that shows us that it will take a while for this company to become profitable, but they've definitely got enough growth to get themselves to that position. So that's a positive sign. And finally, I'm going to talk about the cash in hand. So they have 426 million cash, despite actually just buying Metromile recently. So that's a really positive stat there as well. So now let's go through the actual share price. Okay, let's have a look at the chart here.
As you can see from the graph, the stock price started at $50 and IPO'd to $70 in the summer of 2020. It then rose to $90, but then dropped back to $70 and then $50 in September of 2020.
Yeah, so it had a bit of a volatile start as IPOs usually do. But then a lot of people started to see what the potential was of the company, and as well as there being a boom in the tech market, this was one of the stocks that actually benefited, and it reached $170 in early 2021. So that was a massive value increase. Since then, it then decreased, as most tech stocks did at the beginning of after sort of Feb 2021, and we saw the stock price almost hit $70 again. It then rose to about $115, and since then we've seen it decrease even below its IPO price of $50, and now it's sitting at $35. So we're seeing almost a five-fold decrease from its all-time high. and it's sort of much lower than its IPO price. So there's definitely some. When its company hasn't decreased in its value by five. Like there's no fundamental change here. They've acquired Metromile. So in fact, the company's become even stronger. But unfortunately, due to other pressures, which we'll talk about later, there's been a general pressure in the overall market, and that's caused the share price to reduce so much.
So why are tech shares like Lemonade getting hammered so much recently?
So there's a several-fold reason to this. The main reason is there are inflation fears. So recently, we've seen inflation rocket sky high. So in the UK, it's about 4%. In America, we've seen the latest CPI data show 7% inflation. And why that's and what that means is the Fed are likely to increase interest rates. They've already said that they're likely to increase interest rates three times. So why does interest rates and inflation affect a tech company? Why is that important? It's because a lot of these companies, like Lemonade, like the high growth companies, they need to borrow a lot of money in order to grow, to sort of expand, take over Metro. They need to borrow lots of money, and that borrowing becomes more expensive as the interest rate increases. So it means that they are going to be paying more for their debt, and it reduces the amount of profit they get. So overall, the higher the interest rate is, the less profit a company which borrows more is going to get. And this has impacted sort of most tech growth companies borrow money. That's just how it is. When you are in growth mode, when you haven't sort of reached that profit level, and even with the companies which have reached profit level, they need to borrow a lot of money. And so it's causing hammering, and that is a slight risk because what if Lemonade can't afford to pay their debt? That's going to dilute the value significantly. They're going to issue more shares, etc. But if Lemonade sort of continue on the trajectory they are doing, if they grow their revenue as is expected, there's no doubt this company is going to reach profit in a few years' time, and sort of the inflation fears will be old news. So this is a risk to take in consideration, but I wouldn't sort of be scared to invest because there's always cycles in the market. So to conclude, what do you think of the investment we picked today, Ramesh?
I think it's a good investment. It's very promising, and I hope it will do well in the future.
I mean, I think we've picked out good arguments to invest in Lemonade today, and I mean, if you were going to get insurance and Lemonade was available to you, would you use their facility?
Yeah, I would use the app as it's very easy, and as the world evolves more around apps, it's good for the future.
Yeah, it's definitely driven for the future, and in fact, uh, a fact that I forgot to mention is that most of its users are actually under 35s right now. So it shows you that they are sort of it's the younger market have already been quite attracted to Lemonade.
Yeah.
So guys, hope you enjoyed our stock pitch of the month, and if you did enjoy, please like and subscribe our video. Um, and yeah, we will be back very soon for our next video, which is likely to be a cryptocurrency. So we'll continue researching, and you'll see us back very soon.
Thanks for watching.
Yeah, thanks for watching, guys.